We got some great news for US stock market investors as the unemployment report came out and reported that jobs increased by 139,000 in May. As a result, stock markets in the US surged. The S&P 500 was up by 1.18% during middle of the day trading. The Dow Jones Industrial Average was up by 1.1%, and the Nasdaq was up at 1.41%. So I'm going to discuss the details of what was announced in this jobs report, why it's good news for stock market investors, and why there's a hidden downside here, which I don't think is very bad, but it's something that investors need to know about as a result of this jobs report. Right. So total non-farm employment increased by 139,000 in May, and the unemployment rate was unchanged at 4.2%. The U.S. Bureau of Labor Statistics reported today on June 6th, 2025. So this is much better than I was expecting. You've been hearing me talk about the chances of a recession have increased here in 2025 following the tariffs, the increase in tariffs that President Donald Trump placed on April 2nd, the Liberation Day tariffs. And I was surprised to see that total non-farm jobs increased by 139,000 in May. That was the reason why the stock market was up so much today, is because of this employment release. Many in the stock market are also concerned about the odds of a recession following the increase in tariffs. So this was pleasant news to be sure. So the unemployment rate held steady at 4.2% in May and has remained in a narrow range. The number of unemployed people stood at 7.2 million. So these are the number of people that want to work but have not found a job that suits their needs. Now you can see in the chart here, going back all the way to May of 2023, the unemployment rate in the US has been rising from around 3.6% now all the way up to 4.2%. So typically when that happens, it continues and the unemployment rate keeps rising until eventually we hit a recession. And so that's why a lot of economists have been forecasting a recession, is because of that increase in the unemployment rate going back to 2023.
Click the link below to watch the full video.